Hello students, welcome to N-Smart classes. Today we will be having a full-fledged discussion on the accountancy question paper of CBSE class 12. So let's start. Now here is question number 1 for you. Now this is the question given in which they have asked for the interest on drawings. Now, interest on drawings to be calculated when the drawings are made in the beginning of every month. So when this line is given beginning of each month, that means the drawings we have to take for 12 months. So the drawing amount is 20,000. So 20,000 into 12 into the rate, which is 6%. So 6 by 100, and the average period. Now for the average period, what we need to do here is we need to take into consideration the number of months from which the first drawing has been made and the number of month that is left for the last drawing after the last drawing has been made. So here it is beginning of the month, so that means the first drawing is made in 1st April. So 1st April to 31st March, 12 months, and from 1st March, which is the last drawing, till 31st March, it's 1 month. So 12 plus 1. So I show you here 12 months plus 1 month by 2. So this gives me an average period of 6.5 by 12. So if you calculate this, your answer should be none other than 7,800. So option A is the correct answer. Now we move on to the next question. That is question number 1 or. Now 1 or, if you see here, the students have been asked to calculate the average period. So the average period. Now the drawings have been made in the beginning of each quarter. So beginning of each quarter means, again the rule which was applied for the previous question, same will be applicable. The only thing is here drawings will be made quarterly. So if drawings are made quarterly, then what we do, again in the same manner we will be doing the calculation. So 12 months, because it is in the beginning of the month, and the last drawing will be made in the month of January 1st. So 3 months. So 3 plus 12 by 2 is 7.5. So you can see 7.5. So your answer will be 7.5. Option C. I move on to the next question. Now next question is PQR are partners sharing profits and losses in the ratio of 6:5:4. They have admitted S as a new partner for 1/8 share, and it was agreed that Q would retain his original share, and then the sacrificing ratio between P and R will be okay. So if Q is retaining its original share, that is 5. So if Q is retaining its original share, which is 5, that means Q will be having no profit, no loss. So no sacrifice, no gain for Q. So the remaining partners are P and R, and if you see here, P and R are having 6:4 as their ratio. So if you bring it down, 6:4 is nothing but 3:2. So you see option C should be the answer, and yes, it is option C, which is 3:2. Now I would like to move on to the next question. So the next question is, Ravi, Sunil, Amit were partners in a firm sharing profits and losses in the ratio of 4:3:5. Now this question has been given to you with a lot of things like new ratio, which is 2:3, 4:3:5 is the old ratio. Now Ravi has retired. So Ravi has retired from the firm. Now if Ravi has retired from the firm, he will be the outgoing partner. So he has to be paid off by the remaining partners. Now how is he paid off? He is paid off by bringing in, or the amount payable. So that is what you've been asked. The amount payable to Ravi will be brought by Sunil and Amit in such a way so as to make their capital proportionate. So this is the key word, proportionate. So the capital has to be in proportion to the new profit sharing ratio. So how would we do it? Now the total capital of the firm will be constituted in such a manner that it becomes it includes the payment made to the retiring partner Ravi. So how do we do it? We take a sum of these three. So if we take a sum of this 3 comes to 6 lakh plus 3 lakh, that is 9 lakh rupees. So we write 9 lakh over here and we divide this in the new ratio, that is 2:3 between Sachin, no, I'm so sorry, this is Sunil and Amit, as Ravi is retiring. Now, if you divide this in the ratio of 2:3, it will be 3,60,000 and it will be 5,40,000. So this is their capital. This is the capital that they are having currently, or this is the capital that they are going to maintain currently. So existing capital is 2,40,000, 3,60,000. So the remaining amounts will be brought in by Sunil and by Amit respectively. So 1,20,000 and 1,80,000 will be brought. Now students, you can see this option is given in option number B. So option number B will be your correct answer. So I would go with option number B. Let's check now. Yes, it is option B only. Next we move on to the next question, that is 4A. 6,000 shares of 25 each were forfeited for non-payment of final call of rupees 5. So this means that 5 rupees if not paid, that means 20 rupees have been paid because the shares are having a value of 25 each. So that means 20 into 6,000, if you do, 1,20,000 is the total amount received on those shares. So that is the maximum discount that you may allow. So you see the option 1,20,000, option C is the correct answer. Then this question also has an OR. Now here the question is asked in a twisted form, in a different form. Here they have asked you how much minimum amount the company must collect. Here how much they can give the discount, here how much they can minimum collect. So how much amount can be collected here? The amount that can be collected over here will be just the opposite. So opposite, let us do it in this way. So 20 rupees is the value of each share, on which 4 rupees have not been paid. So 4 rupees not been paid means the remaining has been paid. The remaining goes to forfeiture and the 4 rupees only needs to be collected. So 4 into 5,000, 20,000 should be the option. Now let us check the answer. Is it 20,000? Yes, it is 20,000. So let's move to the next question. Now Ravi, Sohan, Neena were partners in a firm sharing profits in the ratio of 5:3:2. Now on this date Soham retired. Now Soham is the person who is retired. So this person has retired. Now the middle person has retired and his share was taken up by Ravi and Neena. So Ravi has taken up 2. So from this 3 you add 2 to Ravi, and from this 1 you add 1 to Neena. So this becomes 7 and this becomes 3. So 7:3, option D should be the correct answer. Now let us see, it is 7:3, and then we move on to the OR part of it. Kunal, Raj and Leela were partners in a firm sharing profits and losses in the ratio of 4:3:2. Now on 1st April, Kunal retired, Raj and Leela decided to share future profits in the ratio of 5:3. The gaining ratio between Raj and Leela would be, now let us calculate this. You see the formula for calculating gaining ratio is new ratio minus old ratio. So let us do it for Kunal. So Kunal will be 5/8 minus 4/9. So if you calculate 72 will be the LCM. 72, here it will be 45. 8 3s are 24. So it comes to 21/72. So 21/72 is the answer. Now 21 we can see here, if we do the same manner for Leela, then it will be 11. So option C should be the correct answer. Now let us check. Yes, option C is the correct answer. So this is going to be your answer. Now Rohan and Meeta were partners in a firm sharing profits and losses in the ratio of 5:4. Their capitals are 3 lakh, 2 lakh. They admit Kabir as a new partner for 1/5 share in the profits. Now Kabir brought 1,50,000 as his capital and he is coming for 1/5 share. Kabir's share of goodwill of the firm was, now we don't know the goodwill. Goodwill of the firm is not at all given. We can easily understand this is a question of hidden goodwill. To find out the hidden goodwill, we need to do is the capital brought in by the new partner, reciprocate that with his share. So total goodwill of the firm comes to, total capital of the firm comes to 7,50,000. Now the existing adjusted capital is 3 lakh, 2 lakh and 1,50,000. So the sum of this three is 6,50,000. So the goodwill of the firm is 1 lakh. Now 1 lakh is the goodwill of the firm into 1/5 is the new partner's share, that is Kabir. So Kabir is coming for 1/5 share. His share will be 20,000. Now which is the option? B is the option. So let us check. Yes, it is B. Answer is B. Now we have an OR question to this question. Now Ravi, Nisha and Priya were partners in a firm sharing profits and losses. Now Ravi retired. So Ravi retired means this person is gone. Now the reserve and the other things given to him amounted to 2,40,000. But Nisha and Priya agreed to pay him 2,70,000. So this extra 30,000 that is paid to Ravi is for what reason? It is for the goodwill of the firm, his share of goodwill in the firm. Now if 30,000 is his share, now you could see here 4:3:1. That means he was getting half share. Half 4/8 is half. So if 30,000 is for the half share, so if half is for 30,000, then total should be 60,000. Reciprocate. So the goodwill of the firm should be 60. Now the goodwill of the firm has only been asked. So option C should be the correct answer. Now let us check this. Yes, it is 60,000 only. Let us move to the next question. Ankur Angad were partners in a firm sharing profits and losses in the ratio of 8:7. On 1st July, Angad advanced a loan of 8 lakh, but there is a contradict because they have given an interest on loan at the rate 10%, but there was nothing mentioned in the deed. So if nothing is mentioned in the deed, then in that case, what do? We need to take the interest on loan at the rate of 6%. So here it's not mentioned, so we will be taking in that rate only. So if we take it, the calculation is pretty simple. The calculation would be 8 lakhs into 6/100 into, we have to take the time because it is given in the month of July, so 9 months we will be taking the interest. Whatever the calculation comes to, I think it will be 36,000. Let us see. Yes, 36,000 is option A, so we will go with option A, 36,000. Now the next question, I think this question also, no, this question doesn't have an OR. So 8A. Now dash debentures refer to those debentures where charge is created on assets. Now when there is a charge on asset, that means it is secured. Secured means there is an asset which is secured against which you are getting this loan. So if the loan cannot be met, then the debenture holders or the bankers can come and take your asset. So it's a secured loan or secured debenture. So secured should be the answer. Let us check. It is secured only. So secured debenture. Next, we move on to the next question. That is OR. Now, as per Companies Act, the amount received as securities premium cannot be utilized. Now, if you people have already studied, if you students have already studied about this thing, then you must know that premium can be like used for issuing bonus share, writing preliminary expense, and also buying its own share, except fixed assets. So purchase of fixed asset should be the answer. Now let us move to the next question. Now a business earned an average profit of 2 lakh. Very good. Let's see. Now the value of net assets is 17 lakh and the normal rate of return is 10%. So we can easily calculate normal profit from this. So normal profit will be 1,70,000 and 2 lakh will be your 2 lakh is your average profit. So average minus normal gives you your super profit. So super profit comes to 30,000. Now 30,000, the value of goodwill of the business by capitalization of super profit method will be, just divide this by 10%. So if you divide this by 10%, you must get your answer. I think 3 lakh is the answer. Yes, it is 3 lakh. Next, we move on to the next question. Now, Asha, Manan and Niyati were partners in a firm sharing profits in the ratio of 3:2:1 with effect from 1st April. They decided, or they agreed to share profits equally due to change in the profit. Okay, now we have to find out Asha's gain or sacrifice. Now the ratio for gain or sacrifice can be calculated either by old minus new ratio or by new minus old ratio. So here we will be applying the old minus new ratio. So let us see what is the old ratio of Asha. Asha is the first person, so 3/6 minus new ratio is equal, so 1/3. So if you take the LCM of this thing, it will be 6 only. Now 6, so 3 minus 2, that is 1/6. Now 1/6 is coming in positive, and we have applied the formula for sacrificing ratio. So Asha is sacrificing, and her sacrificing ratio is nothing but 1/6. So this is your answer. Now next, we have this question. Dinesh, Siddharth, Narayana were partners in a firm sharing profits and losses in the ratio of 5:3:2. On 31st March, they decided to dissolve the firm, and the firm had debtors amounting to 2,10,000. So 2,10,000, there's a debtor, there's a provision for doubtful debt of 20,000. Now, if we are doing realization account, students, we always transfer the debtors on the debit side of realization account as 2,10,000, and on the credit side of the realization account, we credit provision for doubtful debt 20,000. And we do nothing with that provision, we only deal with the debtors. So here you see there's a debtor of 10,000 proven bad. That means we will not be recovering that. So the debtors which can be recovered is 2 lakh. Now those debtors have been realized at 90%, means the answer should be 1,80,000. That is 90% of 2 lakh. So we move on to the next question. Amic Limited issued 70,000 debentures at a premium, 100 each, at a premium of 5%. So if you are issuing it at a premium, the question is asking how much loss on issue of debentures will be debited. So there is no question of securities. Since there will be securities premium, there is no question of loss at the time of issue. But yes, at the time of redemption, it is being redeemed at a premium. So if it is redeemed at a premium, we have to calculate that redemption of premium. So 10% of 70 lakh. 70,000 to 100, 10% of that 7 lakh. 7 lakh should be the loss. So let's move. Now, a portion of uncalled capital reserve. Now, this is a very common question. We have seen this question many a times given in the board. So, uncalled capital, which will be called later at the time of maybe winding up of the company, is called nothing but reserve capital. So, reserve capital is the answer. Let's go to the next question. Now, White Limited purchased plant and machinery worth 3,96,000. The purchase consideration was paid by issue of debentures of 100 each at a discount of 10%. Now, when you are issuing debentures at a discount of 10%, that means the value of each debenture will be 100 minus 10% of 100, that is 90 rupees. So, this is the total value. So, 3,96,000 divided by 90, if you do, you will get 4,400. And on top of that only the option is given. So, C will be your answer. Next, now, assertion reasoning question. Now, goodwill is an intangible asset. Now, from class 11 onwards, you people are studying goodwill is actually an intangible asset which cannot be seen. It's a reputation, and the same thing is written here. Goodwill is the reputation of the firm. So, there's no question, or there's no point in reading this question further. Option A would be correct because that's the correct explanation. So, A is the correct answer. Next, Anita, Priyal were partners in a firm sharing profits and losses in the ratio of this. Now it is a question of interest on capital at the rate 8%, but the profit is only 28,000. Now students, if you calculate 8% of their individual capitals, you see I would be doing right now. So 3 lakhs 8% is nothing but 24,000, and the same I would do for this 4 lakhs, so it's 32,000. And if I take the sum of this, it will be coming to 56, which is just double of the net profit. Now, if the net profit is not adequate, then there are two ways. Either we could bring this down, or else we can divide this in capital ratio. Dividing this in capital ratio is the best form and correct form. So, if you divide 28,000 in the capital ratio, it will be, capital ratio is 3:4. So, that means it will be 12 and 16. So, 12,000, 16,000. Yes. So, option C should be the right answer. Let's see. It is. So, we move on. So, here students, we have completed all the different questions, all the different MCQ questions. Now, we will be starting off with subjective questions. So, subjective question, first we will be discussing all the 3 marks question. Then we move on further. So, let's begin again. So, see, Arav, Karan and Meera were partners. On 31st March 2023, Karan retired and 1,80,000 became due. So, all of you could see that he was like, Karan was to be paid in 2 installments. Now, 1,80,000 in 2 installment means 90,000 would be paid each year. Each year, 90,000 rupees will be paid. So, 90,000. But, students, one thing we must keep in mind, that whenever a payment is made, before making payment along with interest, so interest will be calculated. Now, interest is always calculated on the outstanding amount. You must remember this, that interest is always calculated on the outstanding amount. So, for the first year, you can see very well that interest is calculated on 1,80,000. Why 1,80,000? Now, the interest is an expense to the firm. So, interest account debit to the retiring partner. That's Karan's loan account. So, that is the reason we were crediting Karan's loan account with 21,600. That is the amount which is outstanding. On that amount, we are calculating interest. 1,80,000 we have transferred from his capital account, and 21,600 we have transferred by calculating or by charging interest. So, at the end of the first year, we are not only making a payment of 90,000, along with that, we are also making a payment of 21,600. So, this two sums up to 1,11,600. Now, once we pay this, there is no more interest due. So, only one installment left, that is 90,000. So, we transfer that 90,000 over here as well. So, over here also we transfer this 90,000. Now, after transferring this, what we need to do, on the remaining amount which is 90,000 again, we will be charging interest for entire year, that is coming to 10,800, and the next year we pay again 90,000 and 10,800. So, the total comes to 1,08,000. We pay and we close it on 31st March 2023. So, this is the way Karan's loan account will be prepared. I hope this is clear. Let's move on to the next question. Now, next question. It is Rohit, Ashish, Sameer entered into partnership on 1st October with capital of 12 lakh, 6 lakh, 6 lakh. Now, they decided to share profits in the ratio of 3:1:1. Entitled to interest on capital 5%. Sameer was given a guarantee that his capital would not be less than 1,50,000. Any deficiency shall be met by Rohit. You are asked to prepare PL appropriation account. Now, if I prepare a profit and loss appropriation account over here, my net profit given in this question is 5,60,000. So, if I prepare one here, so 5,60,000. Now, the thing that had to be noted in this question is, when have the company commenced, or when have the partnership commenced? You see, the company has commenced on 1st October. So, the interest on capital that we calculate, we will not be calculating it for the entire year, but for 6 months. So, 6 months we will be calculating the interest at the rate of 5%. 5% is the rate of interest. So, 5% on 12 lakh, that is 60,000, half of that, because for 6 months. So, 30,000, 15,000 and 15,000. So, 60,000 is your interest. So, the remaining is 5 lakh. 5 lakh is your capital. So, 5 lakh rupees capital, if you divide among 3 partners, so it will be 3 lakh, it will be 1 lakh, and it will be 1 lakh. So, this is the capital. But what has been mentioned, that any deficiency arising on account shall be met by Rohit. This is for whom? This is for Sameer. Sameer means this person, the third person. So here we will add 50,000, and who is going to guarantee this? Rohit. So we will subtract 50,000 from Rohit. So of course I understand that this is not the proper presentation, so I would show you the answer right now. Here it is. Here it is. Here is the PL appropriation account. You can see the 30,000, 15,000, Sameer. All the interest is given 60,000, 5 lakh 60. So 5 lakh is the total capital. So 3 lakh minus 50, 2 lakh 50, 1 lakh and 1 lakh plus 50, that is 1 lakh 50. So this is the way we will be solving this sum. Next, I would like to move on to the next question. So a small calculation has been made here. If you want to have a look, you can present the question or present the answer in a working manner also. You can do the working and directly post it. Even that is a correct way of doing, or else you can prepare the profit and loss appropriation account, and inside the account only, opening bracket, you can do the calculation. Now the next question is, this is the question of interest on drawings that needs to be taken into consideration. So this is a past adjustment question. Now give necessary journal entry to correct the omission. What is the omission about? Interest on drawings have been missed. There have been some drawings on which interest was supposed to be charged and we did not charge. The interest on drawings at the rate of 10% per annum. So let us show you the calculation of this. Here it is, 30,000, 10% is 3,000, but as we know the date were not mentioned, the time was not mentioned, so we need to take an average period of 6 by 12, so it becomes 1,500, 900 and 600, so total comes to 3,000. Now 3,000 rupees is the total. Now this was not provided, so now it was not provided, so interest on drawings was not taken into consideration and the profits were distributed without the interest. So now I would take it back and distribute it in the profit ratio. So this is coming, the credit is excess for this person Dev, and for Ishan it is a debit balance. So we will pass an entry, that is Ishan's capital account debit to Dev's capital, to 225 each. So this is the solution to this question. We move on to the next question. Now Sanjana and Mehul are partners. Sanjana and Mehul are partners and their profits and losses are shared in the ratio of 4:1. They decided to share future profits in the ratio of 5:3. There's a balance of 40,000 in general reserve and a debit balance of 1,80,000 in profit and loss account. The partners decided to distribute general reserve. So general reserve, the partners have decided to distribute. You have been asked to for journal entry. So general reserve is a liability. Now general reserve is a liability. Liabilities have credit balance. If you distribute it, general reserve account will be debited to old partners capital account. So who are the old partners? Sanjana and Mehul, and it will be divided in 4:1. So 40,000, 32 and 8 it will be divided. But what about this profit and loss appropriation, profit and loss account, which is already having a debit balance? For this, what we need to do is, first we need to find out the sacrificing or gaining ratio. Now once we calculate the sacrificing and gaining ratio, we can move on to the next part. I'll show you. Here it is. Sanjana sacrifices 740, 7 by 40. Mehul gains 7 by 40. So since Sanjana is sacrificing, we will find the compensation amount. 1,80,000. 1,80,000 rupees is the total value of profit and loss. 7 by 40 we calculate, so we get an amount of 31,500. Now since Sanjana is a sacrificing partner, Sanjana's capital will be debited and Mehul's capital in return will be credited. So this is the entry for the profit and loss appropriation account. So you have 3 marks for this question. So here you see general reserve to Sanjana's capital and to Mehul's capital, and then Sanjana's capital to Mehul's capital. That will be all, and with this question is solved. Now let's move on to the next question. Now this is also, I think this is the last question of carrying 3 marks, because 17, 18, 19, 20, 4 questions will be there for 3 marks. So this is the last question of 3 marks. Century Limited forfeited 100 shares at a premium of at a premium of 40%, that is 40 rupees. For non-payment of 35 per share on allotment and 50 per share including premium 25. So that means all total 85 rupees have not been collected and 40 has not been called. So if 40 not called and 85 not collected, so if 40 out of 140, see out of 140, 40 is not called. So remaining is 100. So out of 100, 85 is not paid up. That means the amount received on these shares are nothing but 15. So your share forfeiture account should be 15 into 5,000, that is 75,000. And 85,000 into 5,000, that is 4,25,000 should be your calls in arrear. Now this 40 has 25 rupees premium. So 5,000 to 75 should be your share capital, and premium should be 25 into 5,000, that is also 1,25,000. So now I will show you the entry, journal entry for this. Yes, here it is. Now you see share capital, as I just now told you, it will see, I'll show you here 5,000 shares. Now out of 85, just a minute. Now 100 rupees is the face value. Now 100 rupees, out of 100 rupees, 25 per share have not been called. So 75. So 75 into 5,000 if you do, it will be 375. Securities premium reserve. Now securities premium, it will be 5,000 into 25, the one which you haven't received. 15 has not been called. Again I repeat, 15 has not been called. Out of 40 rupees premium, if 15 not called, that means the other 25 has been called, which is not received. So that is the reason we are debiting. Share forfeiture is very simple. 5,000 into 15, just now in the beginning we calculated. So 15 5s are 75,000, and calls in arrear will be 5,000 into 85. So the breakup also is given to you all for a clear and better understanding. Now these shares are reissued at 90 per share. Now not these shares, 3,000 only. So 3,000 into 100, 30,000, sorry, 3 lakh, 3,000 into 90, 2 lakh 70, and 3,000 into 10, 30,000. 30,000 is the total discount which you are giving from these shares. Now if you see 5,000 shares for which you have earned 75,000. So in childhood days we have practiced unitary method. So for 3,000 in that way we will calculate. So it will be 45,000. So 45,000 minus 15,000, 30,000 will give you 15,000. So this 15,000 will be transferred to your capital reserve. So this is the solution for this question. I would like to move on to the next one. And this is an OR question to question number 20. Now Almonds Limited purchased a running business from Cashew Limited, land and building 85 lakh, 50 lakh is machinery, and liabilities of 10 lakh with a purchase consideration of 1 crore. So 1 crore 10 lakh minus 1 crore 35 lakh. So you're paying less. You see, we are taking assets worth rupees 1 crore 35 lakh, whereas we are just making a payment of 11 lakh, like minusing the liability and making a purchase consideration of 1 crore, where we were supposed to pay 1 crore 25 lakh. So that 25 lakh will be nothing but capital reserve, because you are having a capital gain right in the beginning. So it will be a capital reserve. So it will be transferred to capital reserve. Now this 1 crore will be paid in by 10 lakh through a check. So Cashew Limited to bank 10 lakh and to 11% debentures and to securities premium. The value will be 120 per debenture. So 120 divided by, as in 90 lakh divided by 120. So you get 75,000 debentures at a premium. So here is the solution. So land and building, you see 25 lakh is your capital reserve. Now 25 lakh is your capital reserve, and the amount that needs to be paid will be also shown. Here it is. So 90 lakh divided by 120, you get 75,000 debenture. So 75,000 debenture of 100 each, that is 75 lakh, and 75,000 into 20, that is 15 lakh. So you get the breakup, the split. So this is how you will be calculating the journal entry and the amount for this debenture sum. So with this, we are done with the 3-mark questions from part A. From part A, all 3 markers are done. Now there are 2 4-mark questions. The first one being displayed on the screen. We will be discussing this first. Now Smaran Limited issued 60,000 11% debentures of 100 each at a premium of 10% redeemable after 5 years. The company closes its books and you have been asked to calculate the journal entry for issue, payment of interest and writing of interest. Now students, remember one thing, the debentures have been issued at a premium. So bank to debenture application allotment 6 lakh plus 10%, that is 60 lakh plus 10%, that is 66 lakh. So 66 lakh rupees will be debited, bank account debit to debenture application allotment, and after that the same will be transferred to debentures and securities premium, followed by the interest on debenture entry. Now interest on debenture is a charge, so it will be debited to debenture holders and debenture holders to bank. All will be calculated on the face value, that is 60 lakh rupees. So debenture rate is 11%. So 6 lakh 60,000 will be your interest on debenture, and interest on debenture cannot be written off against securities premium. So you will have to write off this through statement of PL. So here I go. So here is the entry. Here are the entries for this. So bank to debenture application allotment 66 lakh. Debenture application allotment, whatever I said to you all, the same has been posted here. So interest on debenture to debenture holders 6 lakh 60. Then debenture holders to bank, we post it again, as in we make the payment to the debenture holders, and statement of PL to interest on debenture, we write off the interest on debenture. So with this question is also done. Now we move on to the next question. Now Anmol, Kapesh and Meera are partners in a firm sharing profits and losses in the ratio of 4:3:3 on 31st March. Now on 1st July, Kapish died. So this is the sum of death, and on the capital account is credited. So 2,50,000 will be credited, as you have been asked to prepare the capital account of Kapish to be presented to his executors. So what we need to do, we need to first find out what are the things that will be credited or debited to Kapish's capital. So here, for one thing, we found out the balance. Then he had withdrawn 20,000. So this also will be debited. This will be debited from his account. Then general reserve is given as 90,000. So we need to find out Kapish's share. So this is 27,000. So 27,000 we will calculate of this. Then next, balance we have done. Now interest on capital. Now interest on capital will be calculated for how many months? For 3 months. Why 3 months? Because he was alive for April, May and June. 1st July only he died. So 3 months we will have to calculate the interest on capital, which is 2,50,000's 12%, that is 30,000, and for 3/12. So it should be 7,500. Let's check. Now let us check. Apart from this, what else? Now the value of the goodwill is given. The goodwill of the firm is 1,20,000. So we need to calculate his share, that is 3/10. So it comes to 42,000. Now 42,000 in which ratio? In 4:3 ratio. So it will be 24,000 and 18,000. So all these things should be in your answer. Let's check now whether it is there or not. So here it is. Yes. Drawings we discussed. Capital we discussed. Interest on capital we discussed. General reserve we discussed. A's capital, M's capital we discussed. Only thing we did not discuss is PL suspense. So let us go back to the question once and find out. Now his share in profits. His share in profit was to be calculated on the basis of previous year's profit. And the previous year's profit is given as 6 lakh. Now 6 lakh is the total capital of the firm. It is not his own capital. So 6 lakh into his share, that is 3/10. Now again 6 lakh is the capital for the entire year. How much will he get? Because he was alive for only 3 months. So into 3 by 12 as well. If you do this, so this goes 60. So 15,000 into 3, 45,000. So 45,000, I believe 45,000 only I had seen. So here it is. Yes, it is 45,000, and with this total 3,51,500 should be rendered to his executors. Now, to be very honest, CBSE has not really given anything which is unusual till now. So let us see whether we have anything in books or not, anything in stock or not. Let's go and check it out. Now we move on to the next part, which is question for 6 marks. Now again, this year also, like last year, CBSE has repeated a pattern, but in an easy way of giving an MCQ of issue of shares. So 6 marks is again an option, an opportunity for the students to score marks. Now let us see how do they do it. Here the company has started with an authorized capital of 10 crore. Divided into shares of 100 each. So there are how many shares? There are 10 lakh shares. Okay, now this is 30 rupees, this is 50 rupees. So then the balance has to be 20 rupees. Now the balance, all the shares have been subscribed. Raman, a shareholder holding 500 shares, failed to pay the first and final call. Now all we can see here is the total number of shares into which authorized capital is divided into is 10 lakhs. So option C should be the correct answer. Let's check. Yes, C it is. Then we move on to the next question. The amount of subscribed and fully paid up capital of Bright Limited must be, so 500 shares were not paid. So it should be option A, 29. This one, option A is the correct answer. Then next, amount of subscribed but not fully paid up share of Bright Limited. So the amount of subscribed but not fully paid up. So 500 shares were there which were not fully paid up of 80 rupees each, because 20 were not paid. So that will be D. So let us see. Yes, option D is the correct answer. Now, amount of share capital to be presented in the balance sheet. Now, share capital, if you present not only this 2 crore 99 lakh 50,000 you will present, but also the forfeited shares account of 500 into 80. So that 40,000 will also be added. So option C should be the correct answer. And if the defaulting 500 shares are forfeited, share forfeiture account will be shown in the notes to accounts as 500 into 80 rupees was what was paid. So 40,000 should be the right answer. And last but not the least, if all the forfeited shares were reissued at 90 per share, so 90 per share means there's a discount of 10. So 10 into 500 is 5,000. So that means 5,000 rupees discount we are providing on the reissued shares, and we already have a balance of 40,000. So 40,000 minus 5,000, 35,000 should be the answer. And let us check. And with this, we complete question number 23. Now 24, these are all subjective questions related to partnership. Now this is a question of admission. Now here they have been given with a lot of details, like revaluation is there. Raghav brings 5 lakh capital, capitals of Arjun and Kavya to be adjusted on the basis of Raghav's capital. So if we start off with this adjustment only, 5 lakh rupees is being brought by Raghav. So 5 lakh is for how much share? The new ratio after his admission is 1/4 share. So 5 lakh is for 1/4. So the total capital will be 20 lakh. If 5 lakh is for 1/4 share, 20 lakh will be for the entire capital. Now, if you divide it in the new ratio needs to be calculated first. So the calculation for the new ratio is given here. We all can have a look at it. Here it is. So the new ratio has been calculated here. You see Arjun 3/4 is the remaining share, because Raghav takes 1/4 share. The remaining share is 3/4. So 3/4 in this ratio, 9:6:5 is a new ratio. So as per this, if we go, then we get 20,000 as the capital. So now again going back to the question, now the revaluations are related to what? Related to investments. Investments are valued at 2 lakh. 2 lakh 80 is there. So investment fluctuation fund is there. Investment fluctuation reserve, which is 1 lakh. So 80,000 drops. So 80,000 will be taken from investment fluctuation reserve. The remaining investment fluctuation reserve will be distributed among Arjun and Kavya in the ratio of 3:2. That is 12 and 8,000. Then apart from that, there is nothing distributable from the balance sheet. Apart from this, building was to be brought down to 5 lakhs. So there will be a drop of building. 1 lakh will be debited to revaluation account. And apart from this, provision for doubtful debt was to be created 10% on debtors. So if you create 10% of debtors, 16,000 should be there. Already 7,000 is there. So that means 9,000 further will be transferred. So I believe these are the two things that was already mentioned in the revaluation account. So 10,000, 9,000 and 1 lakh rupees building. So the loss among the partners are 65,400 and 43,600. Now we move on to the adjustments. And the last adjustment was Raghav's capital, which also was decided, and the deficit and surplus was calculated here. So this is the final answer. That is the partner's capital account. Now revaluation loss will be transferred. Balances are written. A new capital brought in by Raghav is also mentioned. Investment fluctuation discussed was mentioned. Goodwill was not mentioned. Goodwill I would like to mention once again. Now here in this question, you could see goodwill here. Goodwill of the firm was valued at 4 lakh and Raghav was unable to bring his share of goodwill in cash. So when the new partner is unable to bring his share of goodwill in cash, it is to be adjusted through the current accounts of the new partners. So current account of the new partner means it will be adjusted through Raghav's current account. So Raghav's current account, we have to find out how much it is. Goodwill is 4 lakh rupees. So 4 lakh into 1/4. So 4 lakhs 1/4 we need to calculate, and we need to distribute it in the ratio of 1/4 of 4 lakh is 1 lakh in the ratio of 3:2. So 1 lakh divided in the ratio of 3:2 will give me 60,000 and 40,000. I repeat, Raghav is unable to bring in his share of goodwill in cash. 4 lakhs 1/4, that is 1 lakh, will be distributed in the ratio of 3:2 between Arjun and Kavya. In 3:2 is coming to 60 and 40,000. And the remaining calculations are all done here by introducing cash of 4,13,400 and 75,600. Their capitals are becoming proportionate to 9 lakhs, 6 lakhs and 5 lakhs each. So that's all. Now we will be moving on to the next question, which is a question of retirement. Now, retirement of a partner is also given here with a lot of adjustments. Now here also you see there is workman's compensation reserve. Now there must be some adjustments which are in the next slide. Of course, yes, there are. So goodwill of the firm is valued at 6 lakh. Now the retiring partner share would be adjusted through the capital accounts of the remaining partner. Now the unrecorded creditor has to be taken into account, and you've been asked to pass journal entries. Now unrecorded creditor. So creditor is a liability. Now you have to take into account. So creditor is the liability is increasing. So creditors will be credited and revaluation will be debited. Now debtors of 15 to be written off. So debtor you write off. Now write off from where? Write off from PBD. So provision, it will be written off against provision. Then liability on workman's compensation amounted to 40,000. So workman's compensation reserve to workman's compensation claim or liability on workman's compensation 40,000, and the remaining 60,000 to be divided in the old ratio among the remaining partners, in the old partners. So let us move on to the solution and quickly find out whether the same has been posted or not. Yes, all the things have been posted. You see workman's compensation reserve is 1 lakh, liability 40,000, and the remaining partners get the remaining workman's compensation. Revaluation to creditors, provision for doubtful debt to revaluation debit to debtors. So 5,000 is the only loss because debtors actually reducing by 15, but there was already a provision of 10,000. So the loss amounts to 5,000, and creditors this loss is also 20,000. So total 25,000 loss. This 20,000 and this 5,000. So this 25,000 entirely will be borne by the old partners. And the most important part of this question, that is the goodwill, I kept it for the end so that we can discuss. All of you can see here the ratio is given. So as per the ratio, there is a partner who is not sacrificing. I'm sorry, not gaining. There's a partner who is not gaining, rather he is also sacrificing. You can see the most important part of this question. Now in this question, you can easily see that Manav has sacrificed. Sorry, Manav has gained 6/10. But Kunal has sacrificed. In general, what happens when an outgoing partner is there, that is a retiring partner, he is generally the sacrificing partner. But in this case, even the remaining partner is also sacrificing. So, okay, students, now for this treatment, what we will do is, whoever is gaining will have to compensate the sacrificing partner. So in this case, the retiring partner is the sacrificing partner, and also Kunal. Kunal is also a sacrificing partner. Now, the retiring partner's share of goodwill amounted to 3 lakh for 5/10 share. So on the basis of that, 50,000 will be borne by the other partner. So in that case, what we do, we will have to pass an entry like this. Manav's capital account debit 3 lakh 50 to Arav's capital and to Kunal's capital. I would like to show you this thing, that Arav is the retiring partner and he is getting 6/10. He is sacrificing 6/10, and for 6/10 he is getting 3 lakh rupees. So this person is just having 1/10. So if you divide in this proportion, for 6/10 if it is 3 lakh, then for 1/10 it will be 50,000. So this way we can also find out. And after doing that, whatever amount, including Arav's capital, entire amount that has been credited over here, Ayan is actually Arav. So Arav, whatever amount has been credited to him will be added, and if any amount like this has been debited, will be subtracted, and the remaining balance will be transferred to his loan account. So we move on to the next question. Okay. Now, Astha invited application for issuing 1 lakh shares of 10 each. The amount per share was payable as 2 on application, 3 on allotment, 3 on first call, and 2 on final call. Now, this question is of pro rata. As you can very well see, it was allotted. How it was allotted? 1 lakh 50 was received application and 30,000 was rejected. 30,000 straight away was rejected. So the remaining shares, that is 1 lakh 20, is being given 1 lakh shares. So that is the pro rata ratio, which is 6:5. So people applying for 6 shares are getting 5 shares. So we can easily bring it down in this way and see what has happened is, excess application money with application was to be adjusted on allotment, and all shares except the allotment money, Sarthak, who was allotted 2,000 shares. So he was not, like Sarthak did not pay the allotment money, and these shares were forfeited. The first call was made thereafter, and the second call was not yet made. So second call entry we do not have to do. Only entry that we need to do is up to first call. So first call, application, allotment, 6 entries, and forfeiture. So all total 7 entries must be passed. Now from this easily we can find out the amount that has been received as application. So application is 2 rupees, 3. So bank account debit to share application 3 lakh. Share application 3 lakh to share capital will be 1 lakh into 2, that is 2 lakh. And to bank will be 30,000 to, that is 60,000. And 20,000 into 2 will be to share allotment. So with this we can proceed. Now the only thing that I need to show you is the fourth entry. So it's given clearly, pretty clear. Now 1 lakh into 3, 3 lakh. Now the calls in arrear part. This is the main area where we expect some students to, be a little more careful in order to calculate, because there was a person who was allotted 2,000 share. He was allotted 2000 share and he failed to pay the allotment money. So as per calculation, it should be 2000 into 3. So 2000 into 3 is 6000. But why is it written 5200? There must be a reason. And the reason is that this particular person had applied for, this is 5. He must have applied for 6 shares. So 6 shares will be 2400. If 2000 is 5, then 2400 will be 6. Then 6 will be 2400. In this way also you can think and find out. So for excess 400 shares, he had paid at the time of application. So 400 into 2 he had already paid us. And we are having that amount with us. So 400 into 2, 800. This we need to subtract. So we get 5200. Now entire shares were forfeited. Now 5 rupees have still now been called. After 5 rupees is called, the shares are forfeited. So the called up value per share is 5. So share capital will be debited with 5 rupees. So 5 into the number of shares, which is 2000. So 5 into 2000 is 10,000. So that is the reason why we have debited 10,000 rupees only. 5 rupees is the called up value, and share capital at the time of forfeiture is always debited with called up value. Share forfeiture, let's calculate cautionary first, which is 5200, and share forfeiture is there is also a way to find out whether this is correct or not. That is, how many number of shares he had applied, as in whatever the total amount paid on these shares. So this person had only paid application money, and at the time of application he had applied for 1200 and 2 rupees. Sorry, 2400 and 2 rupees is what he has paid. So 2400 into 2, if you do, then you get 4800. So this is also a way. Otherwise, you can just balance. But if any of the other amount is wrong, then this also gets wrong and the answer will come wrong. But by doing this, you can easily find out one or the other way. Anyways, we move on to the last part. That is the first call. Now, since we have already forfeited 2000 shares, out of the total shares of 1 lakh, only 98,000 will be called. So 98,000 into 3 is 2,94,000, and the rest bank account debit to first call. So with this we will move on to the next part, which to me was the most difficult question given in the paper, as there is a person where there is a heavy subscription. As you all can see here, the person had applied for 80,000 share, but only allotment was made to 10,000 shares. So basically this person had given 3,20,000, but he was given shares worth 40,000 at the time of application. If you take the entire value also, that is 10 rupees also, he's been given 1 lakh rupees is share only. So that is one of the reason why this is called heavy subscription. Many students will face a difficulty in solving such question, which is to me a little difficult. It's not impossible to solve, but definitely a bit difficult. But students can of course make a wise choice. CBSE has been very kind this year. They have given a very simple question along with a little tricky question. So it was basically a test of your choosing skills. Now the first, as usual, entries have been made: bank to equity share application, the application money, then everything is done. So here is the thing which I had to show. So just now I had shown you 3,20,000 minus 1 lakh. So 2,20,000 goes to bank. Securities premium, it was issued at premium. So 1 into the actual number of shares. So that is 70,000. And this will be 70,000 into 3. And also would like to show you how did we get the allotment money. So if we take 10,000 shares into 6, that is 60,000 rupees. So 60,000, and here we have given 60,000 extra shares, 4 rupees. So 60,000 into 4 is 2,40,000, and I'll show you here 60,000, the first category, 60,000 into 4 they had extra paid for allotment, plus 10,000 shares into 6, because entire payment was done at the beginning only for the second category. So 60,000 plus 2,40,000 gives you 3 lakh. So this is the split. Apart from this, there is nothing in this entry because there are hardly any, only one failure was there. So the rest of the calculation is as clear as it is. So you can easily calculate this. 70,000 to 6, 4,20,000. Then bank account debit, there's a failure. Only one person has failed. You can see this. Only one person is there who has failed to pay for 500 shares. So here also the same thing would be applying, and this 500 person is belonging for the first category. So half. So that means we can easily find this out. This calls in arrear treatment also I'll show you. So 500 into 6 is the calls in arrear. 500 into 6 rupees, this person failed to pay. So failed to pay is total 3,000. But see, calls in arrear is only 1,000 rupees. Why there is 1,000 rupees? Because this person had applied for 1,000 shares. Because the category is just double. 1,20,000 shareholders gets only 60,000 shares. So they must have applied for 1,000 shares. So 500 into 4 at the time of application, they had given extra. So 2,000 is subtracted from 3,000, 1,000 rupees is coming. And later on, first call entries are made with one person failing, that is 700 rupees. Another person gets added, calls in arrears. So there's already a 500 plus 200, so 700 shareholders, 1 rupee. Because the balance was given, so 6 plus 3, 9 rupees, and 1 rupee balance, so 10. So this is the entire journal treatment for issue of shares. And with this, I think we are left with only one question from part A, that is question number 26. Yes, I was correct. So this is the last question. In this, realization account has been asked to be prepared. So all these assets, 1, 2, 3, 4, all will be posted to the debit side of realization account, and these two are external liabilities. So these two will be credited to realization account. Now 50% of the creditors were given stock. So 6,50,000 gone. The remaining 6,50,000 was settled at a discount of 20%. So that means 5,20,000. It will be paid at 5,20,000. And if you read these adjustments, nothing has been mentioned about bank loan. Bank loan being an external liability has to be paid off. So there will be two payments. One for bank loan at 7 lakh rupees, that's the book value, and 5,20,000 for creditors. And here investments were taken away by Kanak at 8,40,000. So by Kanak's capital 8,40,000. Debtors realized 8,50,000. Machinery at a 70% profit, 70% book value. So that means 8,40,000 again. So by bank, debtor, assets realized, debtors, and this machinery both will be credited, and realization expenses were paid by Arhan. So to Arhan's capital. So all these things I discussed, I will show you also in the realization account. Here it is, all the 4 assets transferred, liabilities transferred, 2 assets realized, 2 liabilities paid off, 1 realization expenses paid, and the last one was investment taken over. So with this, the loss is coming to 1,10,000. Now students, I would really say that this was a very good scoring opportunities for the students for 6 marks only. This was a very simple question, and with this we complete part A. Part A is fully done. Now we move on to part B, and as you know, part B starts with MCQ. And this is the calculation for this given. Now part B. Now part B, here you go. Now part B, Quick Limited, a finance company paid interest on borrowing amounting to 80,000. This will be shown in cash outflow, operating activities. And statement 2, non-financial enterprise paid dividends amounting to 2,30,000. It will be shown in cash outflow, operating activity. So of course this is correct, and statement 1 is true and 2 is false. 2 is not correct because this is a non-financial company, and paid dividends amounting to this will not be shown in operating, rather it will be shown in financing activities only. So that's the reason statement 1 is true, statement 2 is false. Now with this we move on to the next question. The following information is obtained from XYZ Limited. Now there's a operating cash inflow from operating activities 28,000, used in investing activities 32,000. So 28 minus 32 is minus 4 and plus 5, so plus 1000. And if cash and cash equivalent is 25, so 26 should be the closing balance. So I think option C should be the right answer. Let us check. Option C is the correct answer. And for this, the profit and loss obtained, okay, debit balance 30, credit balance 56. So add it up, 86 and 36 is interim dividend. So 86 plus 36 is 92, 1,22,000. So 1,22,000, I think C should be the right answer. Let us check. Yes, C it is. So C over here and C over here as well. So let us move on to the next question. Now the debt equity ratio of a company is 2:1. Which of the following transactions will increase the debt equity ratio? Of course not issue of shares. Issue of share will decrease. Issue of debenture is the right answer, because if you issue debenture, the debt will definitely increase. So option B will be the right answer. I think it has an OR question as well. No, it has no OR question. So 30A, which of the following statements are true? Now, if you read all the statements, I can easily see this is not true. Trade payables turnover ratio doesn't express the relation between net sales. It does express the relation between net credit purchase and average trade payables. Operating profit ratio plus operating ratio is 100. So this is also not true. Which is true? The first one is true and the fourth one is true. So option number D will be the right answer. So if we go and see here, option D is the right answer. Now ratios which are next question. Ratios that are calculated for measuring efficiency. So measuring efficiency is done by activity ratios. You see, activities we do is for measure. So measuring activities, as in measuring the efficiency, is turnover ratio. Activity or turnover ratio. So turnover ratio should be the answer. Now turnover ratio is the answer. So it's done. Now here you've been asked to calculate, to classify the items on the basis of headings and subheadings. Major heads and subheads. So interest accrued on investment. Now interest accrued, so I'll be receiving. So it is a asset. Now whether it is a long term or short term, interest accrued, how many years will it accrue for? It will be accruing and I'll be getting it in some time. So it is a current asset and it will come under other current asset because it will not fit in any of the other heads. Calls in advance, again, how many days will you have the advance paid for? For a short time, so it will be a current liability and other current liabilities. And last, mortgage loan. Now mortgage loan is a long-term loan, so non-current liability, and of course it's a loan, so it's a borrowing, so long-term borrowing. So here you go. Here it is, all headings, subheadings mentioned as already told and discussed. Next, comparative statement. Now this is one of the most favorite question or most favorite topic of each and every student. So here the revenue from operation is given, cost of revenue from operation and operating expenses are given. So we need to just find out the difference and the profit. So profit can be easily calculated in this way. 30 lakh will be the profit, 15 lakh will be the tax, and 15 lakh will be profit after tax. Here also 15 lakh will be the profit, as 10 lakh is the expense, and 25 lakh and 7 lakh 50 will be the tax, and 7 lakh 50 will be the profit after tax. So here I show you the calculation. Now let us see how it is been done. So RFO is given, cost of RFO is given. Now we have taken the difference, that is 25 lakh, 9 lakh, 1 lakh, 10 lakh, and the difference is 15, 7 lakh 50, 7 lakh 50, and the percentages are taken. Now how do we take the percentage? I'll show you one, the rest will be calculated in the same manner. Absolute change divided by the base year into 100. So into 100 if you do, you get 100% because it's nothing. So this is how we calculate. Now this is the solution. So you people must have done it correctly, I feel. Let's go ahead. Now we are into the ratios. Now ratios, they have asked us many ratios. You see here, average inventory is given. Now we know average inventory is given, inventory turnover ratio is given. So inventory turnover ratio is equals to cost of revenue from operation divided by average inventory. So cost of revenue from operation is not known. So I can easily calculate this. It will be 9 lakh 60, like cross multiply. 9 lakh 60. Goods are sold at a profit of 20% of revenue from operation. So 20% of revenue from operation means 25% on cost of revenue from operation. So 9 lakh 60 was my revenue from operation. So if I calculate 25% of that, it will come to 2 lakh 40. So my total revenue will be 9 lakh 60 plus 2 lakh 40, that is 12 lakh. 12 lakh will be my revenue from operation. Because in this question revenue from operation is not given and it has been asked to me to calculate, so I will be calculating it from the point of view of cost of revenue from operation, which I have found out. So this is the thing. Next is trade payable turnover ratio. Now see, 24 lakh and opening trade payables 5 lakh, closing trade payables 7 lakh. So if we take the average of these two, so 5 plus 7 is 12 lakh. 12 lakh by 2 is 6 lakhs. 24 lakhs by 6 lakhs is 4 times. So let us check the answers. So as I told you, 12 lakhs, here it is. 12 lakh is the answer. 9 lakh 60, 25%, 2 lakh 40. We added, we got the answer. Next is trade payable turnover ratio. So average trade payable 6 lakhs and the ratio is 4 times the answer. Now we go to the OR question. Now quick ratio and working capital turnover ratio. Now quick ratio, we will take quick assets plus quick divide by quick liabilities. So quick assets are trade receivables, inventories are not, marketable securities and cash, prepaid expense again not. Because to find out quick assets, sometimes we take current assets and the formula says current assets minus inventory minus prepaid expense. So we will not be taking those two assets and we get the total. So 5 lakh plus 1 lakh 20 plus 80. So that's 7 lakh, and trade payables will be this one and this one. So it will come to 3 lakh 60 plus 1 lakh 5 lakh. 7 lakh by 5 lakh, that is 1.4. And working capital turnover ratio, now we will have to add all these assets. So 2 lakh 40 and 63 lakh will also be added. So 10 lakh will be my current assets and current liability is 5 lakh. So 5 lakh is my working capital divided by revenue from operation divided by working capital. So 24 lakh divided by 5 lakh. How did I get 5 lakh? I repeat once again. That is all the 5 assets, the total of which is coming to 10 lakh minus 5 lakh current liabilities. So total coming to 5 lakh. So working capital, now I will present it to you. Here it is. So quick assets 1.4 and working capital turnover ratio, everything is mentioned here. All of you can go through this and you can easily see how we got the answer, 4.8 times. So with this, we are moving on to the last part, last questions, or the question is 34. Now, from the following information, calculate cash flow from investing activity. Now, machinery is given, accumulated depreciation is given, and there's an adjustment related to it. So, without doing anything further, what we need to do is we need to take out we need to prepare 2 T format accounts. So, T format accounts will be prepared and we will have to calculate how much is the purchase and how much is the sale. You can see costing 80,000 on which accumulated depreciation is 20,000. So the book value of the machinery was 60,000. Now 60,000 was sold at a loss of 20%. So 60,000 sold means at a loss means 12,000 is the loss. So 48,000 is the sale value. So with that way we have found this solution. So 12,000, 48,000, accumulated depreciation 20,000, and this accumulated depreciation will be transferred back to the accumulated depreciation account. And from there we have found the depreciation value. Though it was of no need, this account might have been skipped by the students because this actually doesn't have any requirement, but just for the calculation we have done. So this amount as inflow, this amount as outflow will be posted to the cash flow from investing activities. Here it is 48 and 4,22,000. So this is your final answer. Last question of accountancy for the year 26. Here it is 34B. From the following information you are asked to calculate financing activity. Now share capital, you can see 5 lakh has been issued. So issue of share capital 5 lakh. 8 lakh becomes 11 lakh. So issue of debentures, again issue of debentures is 3 lakh. Then bank overdraft also is increasing. That means we have taken more overdraft. So more overdraft again is a positive inflow. So all these 3 inflow, cash at bank will not be taken here. It is cash and cash equivalent. So it will not come in financing activity. and the debentures were issued on 1st October. So the calculation, so interest on debenture is an outflow, it's a payment, so it's an outflow of cash. So this will be subtracted. So here is the solution, and the calculation is also shown here. So here you see 8 lakh was there right from the beginning. 8 lakh rupees was there throughout. It became 11 lakh. So another 3 lakh was issued. Only for 6 months we will be providing interest. So the total interest is coming to 95,000. Now 95,000 is going to be subtracted, and with this we get an answer of final answer of 8,05,000, and with this we are going to complete the answer to all the questions. Thank you everyone. See you in other videos. Thank you.